Welcome to Next Trade channel. Now in this video we're going to see how to make a basic trading setup by using like an simpler concepts in trading, right? So yeah, let's get this started. First off, there are traders who don't even use anything, literally anything, right? So what they do is like have an imaginary setup in their mind itself. Like for example, here is an IRI, right? And then here is another IRI. Once it is broken, like to an low formation and also followed by an some serious sell-off in this market, they will just take a trade. But some people will wait like it's an support area, so why to take a risk, right? So they will just wait for this line or this zone actually, and if it turns out to be a bearish one, they just short it. All right. Yeah, and their target will be like in next support area. So in this case it is this place, right? This is our next support. Actually this zone is the next support area. This is the next support area. They will be happy to close their position in an average, like in maybe in thousands, 37k, 36k, 35k, 34k, like that, because it's a zone, right? It can't like be pinpointed to an exact location. It is not an TA effective one. All right, they just took this trade in a perspective, like in an what is it, in a large view or out view perspective. So they can't be in a precise position, but still they can make money, and that's the point actually in this video. Make use of just trend lines, and let me show you how they do it. They just mark a line, all right? They just mark a line, and then once it is broken in a bearish way, they just short that token. So in this case Bitcoin, obviously. But in a normal case, how it will be like a good breakdown actually, and then a good retracement with a low volume, and then that should break that previous support. All right, and that's when they take the position, and then they will hold on to the position until it turns bullish. Okay, and then they have their stop loss like in above the resistance area. Okay, so let me just show you like this, right? They will take the position in here because that's when it's broken, and then they will place stop loss like this or this one, right? This makes sense. So yeah, it's not because and like in it's in past candle, because it's just topped out like here and then just fall. It's not the case, because it's a good zone. As you can see, multiple times sellers were interested to sell here, and then even if they wanted to, they aren't able to sustain, because this is three good red candles with an what is it, with a big body. So it's not a good uh, it's in good resistance actually. So yeah, they will close in this place mostly. And then how about take profit, right? So they will take profit when it's time that bearish trend trend changes into bullish. So in this case, here's the stop loss, so they are not gonna close like break even or in some loss because it's in bullish, right? That's not the case, but many would take that risk, but not all. Okay, so they will hold on to the position, and this will be the first good candle for them actually, for the shorters. And then yeah, market just falling and not yet bullish, right? So yeah, they wouldn't have closed this position, but some might have think like, well, this is an what to say, it's in day candle, right? So it's a big support, and it has fallen like some good value from like 64k to like 30k. It's a good fall, right? So they might consider take profit, right? So that's how they do it. Or else in this case they can have this line, then have this line. If this is broken in a good way, they might consider closing this position. Alright? So that's how they trade actually. Who make use of indicators. There are indicators like RSI, right? Rate of strength index, then stochastic, RSI, and volume profile, and then EMA band. Sorry, EMA ribbon actually. So there are traders who make use of just this indicators. Please ignore this ones, alright? So that will be used in next trading setup. So that's why I'm using this one. But actually, yeah, as you can see, I'm just letting you know their perspective actually. So for them, it was in an uptrend till this EMA ribbon is maintained, right? They will turn bearish once this is broken, alright? And then check for that RSI and stochastic area. This is already bottomed out, right? This is already bottomed out. So they might not consider taking a position actually in this place, but some might take, and obviously in the same level they will take the stop loss position, and then yeah, they will just enter. But few others, what will do that they just wait for then comfortable fall, like a big fall, exactly like this. As you can see, this is a good fall, this is a very good fall with a very less volume actually. So it just implies that there are not many sellers, but it's just then there is no buyers to buy this. So that's why market panicked, according to them, because of their volume profile is included. And then stochastic and some other stuff are still in top position, right? On that exact time it will be like in this position. So yeah, they will take that trade, and then they will close the position once the falling ribbon is broken out. Alright? Or else there are some RSI based setups which I will cover in upcoming videos, and then there are an independent stochastic RSI setup also, which again I will cover in upcoming videos. Please stay subscribed for that one, right? So yeah, generally they just see these three things, right, and then take a position. That's all in the market. They make use of trend lines, they make use of an imaginary idea of a human being, and then make use of all kind of indicators which they believe that works, and then yeah, this one, the volume profiles. So this is how they actually take trades, and in the next video I'm going to cover about what is price action trading. These all obviously type of trading setups, I agree with that, but it's not an professional way of doing it. Many people follow, many people make money actually. It's not like an failure setup or something like that. You can make money out of it, but let me know that kind of setup, because it's not like an EMA ribbon or RSI or this zone. It's not like that. It is more professional, and then it's not just about lines. Alright, it's just it's more about mindset of that candles that form in that position. Okay, so stay tuned for that one. So yeah, this kind of traders just make use of every single data abundant in the market and take a position, right? They would actually take entry in this place right after the breakdown within good volume, because the trend line is broken, this is broken, this is broken. Just these two indicators are failing, alright? They don't even mind about that one. They just short the market and then have the position like stop lossing here, and then close when this is lower or this is lower, whichever is giving an fastest bullish signal, or even some cases they will make use of this RSI divergence and some other stochastic crossover patterns to close the trade. And that way, whichever gives the first bullish signal, they will just close, or they wait for two or more setups to say that it's a bullish thing, right? And then close the trade. Yeah, that's how it is. Thanks for watching this video.